Hello, everybody. Welcome back to the channel. It's AZ. It's definitely been a minute, but we're definitely back in action. Today, we're going to be starting a new series. It is Road to 10K. Last month in February, I was able to get 3 funded accounts, but unfortunately, I lost them all within about a 2 week span of trading them. Uh, January has been a super fruitful month for me coming into the new year with a couple different values on how I'm going to try to trade. And I just want to let you guys know what you're kind of getting into by watching the series. So, first things first, I view professionalism as the number one thing that I'm trying to learn in 2026. 2025, I decided to learn more about ICT and develop my offensive strategy with trading and execution. This year, I really want to practice on what it means to be a professional trader and how professionals stay in the game. That usually has to do with risk management. So it's been something that I've been trying to develop within myself. So hopefully with this kind of challenge or series, I'm able to keep myself like on track with all that stuff. So I'm gonna cut right into this morning. Started the day at 7:30 and then hit the gym. And then right after it'll be a breakdown of the stuff, the trade that we took. So I just figured that, like, what better thing to do than document a point in time in my life where my store, if you guys didn't know, I work for AT&T. I'm a sales manager as well. So I do that, and I also do trading. So really right now I'm just trying to figure out how to be a better trader so I can leave my job. But obviously the best thing that you can do is balance two professions at once, and I feel like I'm doing it pretty well. We've got one of the best stores in Indiana. It's over in Indianapolis over here in the Midwest. And yeah, have a little sales team. We got about 4 people on the sales team. So usually how our mornings would go is like I'll hit the gym, and then after that I'll go straight over to work and trade at my office, or I'll go to my home office and then trade from there. But like I said, yeah, so daylight savings, first day into the spring session. We're a week into March right now, and we're super bearish on the daily time frame. And I'm just ready to take advantage of my short model. If you guys don't know, I trade this thing called the LeBron model. It's a first presented fair value gap trading model. And that's my bread and butter on this channel. So a lot of the things that you guys are going to see are going to revolve around that model in particular, or an iteration of it, or an inverse fair value gap version of it. So that's kind of just like what I like doing with my trades. And in the bearish season, which would be spring, that is like the best time to trade this model. So all the hard work that I've been working on in November, December, and the off season is just gonna kind of play in my favor here. Obviously, like, the goal is not to have to force trades or anything. So, and that's a lot of what I'm doing right now. So hopefully with the camera and the screen recording on, it kind of just forces me to make better decisions. But I just want to show you guys like what a unprofitable break-even trader routine is for a person who is trying to do this for the rest of their life, one, and then two, is dedicated to getting 1% better. These days aren't always going to look pretty. They're not going to be easy, but what you do during the time that each and every one of us has is way more important. So, just to hold myself a little bit more accountable, I'm trying to have a better just morning routine where I'm allowing my body some time to wake up in the morning and really get after like what I'm trying to do. Because a rested mind and a mind that's ready and sharpened in the morning will do better than a person who gets up at 9 o'clock and rolls onto the charts. All right, y'all, I forgot to start recording earlier on the Mac, but we're already in a trade here on 3 evals. So we're taking a trade short, looking for this 7 o'clock low right here. Here's how we got it mapped out on TradingView. We'll go and do a detailed review after the trade's done here, but we're looking for about $500 today. Inverse fair value gap trade. There was a first presented right here, but we didn't get filled on that. And then ES is super clean, just sweeped at the low. So started it with 3 contracts and got a little bit more of a range, so I want to have a protected stop loss. Risk management has been my worst enemy. So what I'm trying to do a little bit more now is when I give myself a dealing range in the morning, just making sure that I measure out how much we are swinging. Like as you can see from the top to the bottom of the range, it's about 160 points. Should you use a mini here? No. Should you use 5 micros here? Probably not. My protected stop loss is $350. That's kind of like what I like to lose when I'm trading. So pick something that you're comfortable losing and always just adjust for that and nothing else, because if not, you're ruining your system for your risk. So that's what we're doing here. We're literally just looking for this low to get taken out, and then we'll be done with the trade for today and just call it there. So we'll do a recap with the full breakdown in about probably 30 minutes here. I got to do counts around the store right now. Got some more excuse me, got some more stuff to do around the store. So we're just gonna let this trade run, and we'll do the full trade breakdown as soon as we close the position today. I will see you guys soon. All right, everybody, welcome to the trading part of the video. We're gonna be doing the breakdown of what I took today in the morning. Super sweet trade, took about 6.5 minutes for it to fully deliver to my target today. The model that I've been using is the first presented fair value gap model. I call it the LeBron for me. And then on top of that, I use an inverse fair value gap turtle soup strategy. So like after purging liquidity, I want to try to get into the inversion of the fair value gap that was created before the sweep. So today we have a super bread and butter setup. It deals with the London high and then the internal range. As you can see to the right of the screen, we actually did not want to go lower today. So that's why being content with what is given as your guys' low-hanging fruit is so important. And it's something that I've been trying to teach myself, like slow is fast. You only need to take what the model says is available immediately, because when you have a guaranteed, it takes one level of anxiety off. This is how the morning looked right around 9 o'clock. And we have this new week opening gap from our range. Here is the daily. Already came into the day super bearish with just the sense of like, I don't know, I think we were gonna move lower, but we took out our November 21st low. And now we could start instigating a reversal or maybe a market maker buy model on a higher time frame. We just don't know. So today, whatever I took, it wasn't going to be a continuation trade. It was going to be either a market maker model trade or no trade at all. So we were able to take that, and that's all I was looking for. So let's just kind of break it down. So we got our highs and we got our low, and then we had a range from basically 5 o'clock all the way till about open. So it was super clear on what I wanted to see. Since we had this big magnet of liquidity of the new week opening gap, I wanted to see our reaction off of our 5 o'clock high, which is labeled right here in this London high white arrow. We were able to see price quickly spool up in the morning and take out that high. Now ES did not take out that high, so we already had a bearish SMT, and then ES only took out the 830 high and started its reversal right away. So in a money making standpoint, I feel like ES might have been the better trade to hold a runner on, but slow is fast. So why look for more when the opportunities might be less throughout the day? And as you can see, if you can get paid $600 from trading from basically 937 to 946, let's just keep it at there. Most people, that's their car payment if they have a nice car. So I've been trying to deduce in my trading that like, it's okay not to be with the big dogs who are rolling $2,000, $3,000 days. It's just like what you do. And if you know you can do it correctly, the scaling will come with more time, right? So this is the trade that I took today. Super easy inverse strategy. So right here in this orange box is what I just want to bring everyone's attention to. This is a BISI, or a buying fair value gap. So normally you would want to see some continuation here but with the context of London high, new week opening gap, when I see this high get swept, I am going to read this as a BISI if it were to get respected. But you're going to have to let context of the trade tell you if it's going to be respected or not. Okay? If it were respected, we would want to see it respect consequent approachment and push higher and create more accumulation to move higher. But we didn't get that. We got the opposite. So we actually inverted it. We inverted this at 936 today. And this is where the conviction and the screen time really matters. Most people would need extra candlesticks here to take this trade. But as soon as 936 closes right here, it's confirming that we're inversing this not first presented, but this fair value gap to the left here in orange. And that we want to move lower. Now, we could have done a couple things. We could have chopped right here and then moved lower, but we've been super fast over the last couple of days. So it's easier to just pull the trigger on an idea like this. So we invert it, and then we displace out of it at 937, and I get in right here at this small fair value gap, and then take the short all the way to the internal range low, get tagged that at 945 for about 80-point winner, and super easy. So you guys kind of saw that at the start of the video right beforehand. I was in my store just taking the trade, and what I've been trying to do a little bit more is stay consistent with one factor: sizing. You never want to ruin your systematic system that keeps you in the game. We have unlimited opportunities in the market to take and make money. However, you have limited resources, which is your capital in this sense. So today I could have made $800 or a $1,600 winner using a mini, right? And that's what I've been doing to pass these accounts up, right? The problem is when you translate that into your live account, it's not very translative. It's the actual thing that gets you ruined. So what I talked about in that short clip before we moved to the trading breakdown was one crucial concept that I'm trying to adapt. Pick a comfortable losing amount. Whatever your losing amount is, stick to the losing amount. And I'm trying to cram that into my head. The problem of last month when I was trading my live accounts is that I said that I had a comfortable losing amount, but I went past that amount. And on top of that, daily max lost that whole entire day just because I'm not willing to accept the loss. So today I noticed that the conditions were a little bit more volatile. As you can see from the top to the bottom of the range, even though it looks like a small range, it's actually a 150 point swing. So am I going to be willing with 5 micros to put on a trade? Like, my stop loss had to be here today. With 5 micros for 80 points, this is not even a 1-to-1. Well, it's a 1 to 1.2 or some shit like that, right? But I don't want to risk $650 just to make 800. I want it to be a little bit more on my size, right? And I'm not comfortable losing $600. I think that's more to prove the point. But I am comfortable losing about $300 per trade. $350 is a good little median for me. So I know that about myself. You guys who are watching this probably need to learn that about yourself too, and then stick with it. So instead of using my traditional 5 micros, since our given conditions are telling me that we're super range bound and we have a lot of space, it's easier to stay comfortable in a trade by trading with a little bit less size. So I started with 3 here, and then we tagged this fair value gap, and I added 2 more for 5 and took it all the way down to this low right over here for an 80-point trade, made $600 across 3 accounts, and that's how I want to keep it. When I move into the live accounts, I don't want to be making an absurd amount of money on them because I think that's where the emotions come in. I can stomach a $500 or $600 winner, and the beautiful part about Top Step or just copy trading in general is that if you just focus on that on one account, like, I'm not thinking that, oh, it's $600 times 3, I made $1,800. Who cares, bro? Like, that's the little mental gap that really just holds people back, and it holds me back too. So I stopped thinking like that and solely put my mind in the idea of all I need to do is find a way to make $500 a day, right? And for lack of better words, it's only 50 points or maybe 85 points with 3 micros, and that's something that you can do, right? Find a model that works for you individually. For me, it's my LeBron and my inverse fair value gap strategy. For you, it might be the 2022 model. Whatever it is, just stick with it, because I'm telling you, when you find it and you use it, you're just going to continue to build conviction, and that's what this whole entire series is. I have a working formula, but the way that I present it to myself day by day is inconsistent. So hopefully by having an alternative motive of having a series documenting this helps me stay consistent, so you guys can see too, just by like the small habits that you're able to incorporate on a day-to-day basis, you're going to get better, whether you see it monetarily or self-consciously. And I think the latter is a little bit more empowering, because when you know you have that skill, it's just like a matter of time where you'll start to see it translate into your trading. And, you know, that's all we can ask for as traders, just getting better at what we do.